In real estate investing, the term below market often raises eyebrows. For some, it conjures images of failing neighborhoods, desperate sellers, or distressed properties that require major repairs. However, the assumption that below market automatically equals high risk is a misconception, and one that can cause investors to miss out on some of the most profitable opportunities available. At Venus Venture, we specialize in identifying below-market real estate deals that offer significant upside potential without compromising on risk-adjusted returns. Here's why buying below market doesn't necessarily mean you're taking on high risk, and how savvy investors turn this strategy into sustainable profits. A below-market deal simply means an asset is being acquired at a price lower than its current market value. That discount could result from a variety of reasons: distressed sellers who need quick liquidity, mismanaged properties with unrealized potential, off-market deals where competition is limited, or undervalued locations poised for growth. It's not the asset that's inherently risky. It's the investor's ability or inability to recognize and execute on its value that determines the outcome. One of the key investing principles is that price is what you pay, but value is what you actually get. Sometimes a high-priced asset in a so-called hot market can actually carry more downside risk, especially if it's overvalued. On the other hand, a below-market property, especially one that's purchased with a clear value add or repositioning strategy, may offer more protection on the downside and, honestly, higher returns on the upside. When we buy below market, we're really building in equity from day one. That means, even if the market softens, we have a cushion to fall back on. The lower acquisition price reduces our exposure and, at the same time, improves our return profile. The reason below market doesn't have to mean high risk lies in the process. At Venus Venture, we follow a meticulous due diligence protocol before investing in any asset. This includes financial audits and cash flow analysis, physical inspections and renovation estimates, keeping a close eye on local market trends and economic drivers, and, of course, exit strategy modeling and risk forecasting. We don't just jump on a cheap deal. Instead, we pursue underpriced assets with upside potential, backed by strong data and a clear improvement plan. Below-market deals are often found off the radar, not through public listings but via broker relationships, distressed sellers, foreclosure auctions, or direct outreach. These deals typically involve less bidding competition, which leads to better terms and more flexible negotiations. This is where experienced investors have an edge. We're not competing with the average buyer, we're leveraging networks and speed to secure deals before they hit the mainstream. Another reason below market doesn't equal high risk is because we actively create value. Whether it's improving occupancy, upgrading units, increasing rents, or streamlining operations, our active asset management turns underperforming properties into high-performing ones. This hands-on approach gives us control over outcomes, which is a huge factor in risk management. Rather than waiting on market appreciation, we build equity through performance. A well-structured deal can also reduce investor risk by maximizing after-tax returns. Venus Venture utilizes pass-through LLC structures that allow tax benefits like depreciation and interest deductions to flow directly to our investors, further improving overall yield. Not all below-market deals are created equal. Some may carry real risk, especially when handled by inexperienced operators or based on speculation. But when approached with discipline, expertise, and a value-driven strategy, below-market opportunities can be among the safest and most rewarding in real estate. At Venus Venture, we pride ourselves on finding value where others see risk and delivering strong, risk-adjusted returns to our investors. In today's environment, where every dollar counts, buying below market isn't just smart, it's essential.